Liquorice extract HS130212. Liquorice extract. What is really driving the market? Liquorice extract looks like a small product from the outside, but the report shows a market with several layers. It is traded under HS130212, but that code does not describe one single product. It can include raw black blocks for confectionery, liquid extracts for blending, powders for food and beverage manufacturing, high glycyrrhizin extracts, and specialized deglycyrrhizinated licorice, known as DGL, for supplement and wellness applications. That matters because the market is not driven by one buyer type. The report links demand to tobacco, confectionery, food and beverage, pharmaceuticals, nutraceuticals, herbal products, and cosmetics. Tobacco has historically been one of the major industrial users because licorice extract can be used as a flavoring and conditioning agent. Confectionery demand is culturally important in Europe, especially in Nordic countries, the Netherlands, Germany, and the United Kingdom. Pharmaceutical and nutraceutical demand is more quality-driven, where buyers care about purity, glycyrrhizin content, safety testing, and certificates of analysis. The report describes global exports as mature but still significant. It states that in 2023, global export value was around $450 million, while global export quantity was approximately 52,000 tons. That tells us this is not a fantasy niche. It is a real industrial ingredient market. But it also tells us the opportunity is not simply find a supplier and sell anywhere. The product grade, the buyer's end use, the regulatory standard, and the sourcing geography all change the commercial story. So the central question is not whether licorice extract has demand. The better question is, which part of the market are we talking about? Bulk industrial extract, specialized food ingredient, high-purity pharmaceutical input, or a value-added wellness ingredient? Once that is clear, the trade data starts to make sense. What is licorice extract? Licorice extract begins with licorice root, but the commercial product can look very different depending on how it is processed. The report explains that the key botanical sources include Glycyrrhiza species, with important sourcing regions across Central Asia, the Middle East, parts of Europe, and East Asia. Glycyrrhiza glabra is associated with the Mediterranean and Central Asian belt, while China is strongly linked with Glycyrrhiza uralensis and related species. The active compound that shapes much of the product's value is glycyrrhizin, also called glycyrrhizic acid. It is responsible for the characteristic sweetness of licorice and is described in the report as being much sweeter than sucrose. But glycyrrhizin is not always desirable at high levels. For some supplement applications, producers remove most of it to create DGL. That means one shipment may be valuable because it has high glycyrrhizin content, while another may be valuable because glycyrrhizin has been removed in a controlled way. This is why HS130212 is a difficult code for simple trade interpretation. The same code can include low-value blocks, standard powders, liquid extracts, and high-value refined ingredients. A buyer cannot rely only on the HS code. They need specification sheets, certificates of analysis, microbiological testing, heavy metal testing, solubility data, ash content, moisture level, and a clear statement of intended use. For video purposes, licorice extract should not be presented as one flat commodity. It is better understood as a family of extracts. The lowest end competes on volume, availability, and price. The higher end competes on purity, consistency, certification, and application-specific performance. Why does demand exist? The demand story starts with function. Licorice extract is sweet, dark, aromatic, and chemically active. In tobacco, it has been used as a casing and flavoring ingredient, helping create moisture, smoothness, and a distinct sensory profile. In confectionery, it is part of a long cultural tradition, especially in Europe. In food and beverage, it can appear in herbal teas, syrups, flavor systems, and natural sweetener blends. In pharmaceuticals and nutraceuticals, the focus shifts to active compounds, DGL, and standardized extracts. The report makes an important cultural point. Some demand is not just industrial, it is local and habitual. Northern Europe has deep consumer familiarity with licorice confectionery. Germany and the Netherlands connect licorice to large food processing and confectionery ecosystems. Japan is described as a stable and quality-driven market. Indonesia is connected strongly to tobacco demand. The United States is described as a dominant and influential importer, historically anchored by tobacco and industrial use. This variety makes the market resilient, but also fragmented. If tobacco demand weakens because of regulation, health trends, or reformulation, that does not automatically destroy the whole market. Other segments like natural ingredients, herbal products, personal care, and supplements can support demand differently. But these segments usually require higher documentation and more consistent quality. The report also points to a practical demand reality. Import quantity and import value do not always tell the same story. A country buying large quantities may be buying standard industrial extract. A country paying more per unit may be buying refined, specialized, or application-ready material. So demand is not only about volume. It is about what the buyer is doing with the product after import. From raw material to final consumer, the product journey begins in the field, often in places that are not conventional crop zones. The report describes licorice root harvesting in marginal lands such as riverbanks, floodplains, saline soils, degraded land, and semi-arid regions. In Central Asia, wild harvesting has been important, while cultivation is becoming more relevant where producers want better control over supply, quality, and sustainability. After harvest, roots must be cleaned, cut, dried, and moved into extraction. The first processing step is usually to extract soluble compounds from the root. The extract is then concentrated. From there, the path splits. It can become a block or paste for traditional industrial uses. It can be made into liquid extract or syrup for easier blending. It can be spray-dried into powder for better handling, dosing, and solubility. More advanced processors can purify specific fractions, isolate glycyrrhizin, or remove glycyrrhizin to produce DGL. This is where value addition appears. A country with raw root supply may not capture the highest value if it lacks purification, drying, formulation, quality control, and certification. The report repeatedly separates raw material origin from high-value processing. China, Iran, Uzbekistan, and Turkmenistan are important in bulk supply and primary processing. France, Germany, the United States, and Japan appear more connected to specialized processing, formulation, strict buyer requirements, and high-value applications. The final consumer rarely sees HS 130212 on a label. They see a candy, herbal tea, supplement, cosmetic ingredient, tobacco product, or medicine-adjacent formulation. The trade product disappears into another product. That is exactly why the business opportunity depends on understanding the whole chain, not just the export code. Global trade signal. The global trade signal is mature, not explosive. The report describes a long cycle, earlier growth, a boom around the period of high demand and high prices, a correction after the peak years, and then a more stable phase. By 2023, global export quantity is reported at approximately 52,000 tons. That is a meaningful market, but it is not a simple high-growth story. The important point is the balance between quantity and value. Export quantity shows the physical movement of product. Export value shows the commercial weight of that movement. When the two move differently, the market is telling us something about price, product mix, and buyer behavior. The report connects these changes to end-use demand, tobacco regulation, natural ingredient growth, supply availability, and price correction after earlier peaks. Import data tells a related story. Import value reflects actual buyer-side demand, while import quantity reflects the amount of product being absorbed into manufacturing and distribution systems. The report notes that import flows are shaped by tobacco, food and beverage, and pharmaceutical use. But it also warns that import value and volume must be interpreted carefully because HS 130212 includes multiple product grades. For a market entry team, the signal is this: the market is real, but it is not uniform. A supplier entering this market must decide whether it is competing in bulk industrial extract, specialized ingredient supply, or high-value refined material. The trade trend alone does not answer that question. It only tells us where to look next. Top exporting countries. The recent exporter chart gives one of the clearest views of the supply side. Ranked by displayed 5-year quantity, the top exporters shown are Uzbekistan, Iran, Turkmenistan, France, China, the United Arab Emirates, Germany, the Netherlands, the United States, and Israel. The top 5 by quantity in this view are Uzbekistan, Iran, Turkmenistan, France, and China. But the report makes clear that these countries do not all play the same role. Uzbekistan appears as a major volume player, strongly connected to raw material availability and primary extraction. Iran is also a major historical processor and exporter, but its trade profile is shaped by sanctions, market access constraints, and routing complexity. Turkmenistan is presented as a significant raw material and extract supplier, but with a narrower and more concentrated market structure. China is central because of its processing capacity, scale, and ability to connect raw material, manufacturing, and global export channels. France plays a different role, not as a bulk raw material country, but as a high-value processor and formulator. This creates a 2-layer exporter market. One layer supplies volume, Central Asian and regional producers that compete through access to route, lower cost extraction, and bulk flows. The other layer supplies value, countries with stronger formulation, purification, documentation, and application-specific expertise. For sourcing, this means the cheapest or largest exporter is not automatically the best supplier. A buyer looking for tobacco-grade bulk extract may evaluate Uzbekistan, Iran, Turkmenistan, or China differently from a buyer looking for a high-purity extract for supplements or cosmetics. The top exporter list is a starting map, not a final supplier decision. Top importing countries. The recent importer chart shows a different kind of concentration. Ranked by displayed 5-year quantity, the top importers shown are Germany, China, France, the United States, the United Arab Emirates, the Netherlands, Italy, Finland, Indonesia, and Japan. The top 5 by quantity in this view are Germany, China, France, the United States, and the United Arab Emirates. Again, the country names do not all mean the same thing. Germany is a sophisticated European demand center connected to confectionery, food processing, herbal medicine, and industrial formulation. China is unusual because it is both a massive exporter and a significant importer. The report explains this by describing China as a processing hub. It can import lower-cost or primary processed material, refine or formulate it, and then re-export into global markets. France is a high-value processing and formulation center. The United States is described as a dominant and influential importer, historically linked to tobacco demand and industrial-scale usage. The UAE appears as a trade and logistics hub rather than a purely domestic consumption market. This is why importer data is so useful. It shows not only where product is consumed, but where product is transformed, redistributed, or routed. Germany and France may represent high-standard European buyers. China may represent processing demand. The United States may represent large industrial demand. The UAE may represent re-export and trade facilitation. For exporters, the mistake would be to treat all importers as identical. Each market requires a different entry strategy, different documentation, and different buyer targeting. Price per unit signal. The report uses price per unit, or PPU, as a way to understand value movement. But it also warns that PPU is not the same as a quoted market price. It is calculated from trade value divided by quantity. That makes it useful but imperfect. It mixes different grades, contract types, product forms, shipping terms, and levels of processing into one unit value signal. For licorice extract, that limitation is especially important. A ton of standard block extract for confectionery does not have the same value as a high-purity powder or a DGL extract used in supplements. A shipment from a bulk supplier does not necessarily represent the same product as a shipment from a European formulator. The report explains that differences in glycyrrhizin content, purity, physical form, solubility, ash content, safety testing, and certification can all change value. The PPU charts help separate country roles. Bulk suppliers tend to sit in a lower cost tier, especially when they are exporting standard industrial material. Value-added processors tend to show higher PPU because they sell more specialized or application-ready products. France is repeatedly described as a high-value processor. China is described as a key benchmark because of its scale and role in global processing. The United States, Germany, Japan, and France appear as quality-sensitive demand centers in different ways. The report also links price pressure to raw material scarcity, harvesting conditions, processing cost, regulation, sanctions, logistics, and market opacity. So the best use of PPU is not to say, this is the price. The best use is to ask why this country is trading at this unit value level and what product grade is probably behind it. Market entry strategy. A good market entry strategy starts by choosing the segment. The report makes it clear that licorice extract is not one market. A bulk supplier, a high-purity ingredient seller, and a trader serving re-export hubs are not selling the same value proposition. For Europe, the report describes a heterogeneous market. Germany is a large, quality-sensitive demand center with confectionery, herbal, food, and industrial applications. France is more of a value-added processing hub. The Netherlands combines end-use demand with logistics and trading functions. European entry requires attention to food safety, documentation, glyceric acid limits in final consumer products, traceability, and sustainability expectations. For North America, the United States is the core market. The report ties U.S. demand strongly to tobacco and industrial use, while also recognizing food, beverage, supplement, and specialty applications. A supplier entering the United States must be ready for scale, reliable delivery, quality consistency, and buyer-specific specifications. For South and Southeast Asia, the report separates markets such as Indonesia, where tobacco demand is important, from markets where confectionery, beverage, or traditional use may be more relevant. Price sensitivity can be higher, but stable quality and reliable supply still matter. The practical strategy is simple. Do not start with a country name. Start with the buyer type. If the buyer is a tobacco manufacturer, compete on scale, consistency, and flavor profile. If the buyer is a supplement brand, compete on purity, DGL capability, and documentation. If the buyer is a European food processor, compete on compliance and traceability. If the buyer is a trader, compete on availability, route reliability, and commercial flexibility. Sourcing and trading difficulties. The report shows that licorice extract has several sourcing difficulties. The first is product definition. HS 130212 is broad, and the same code can cover multiple grades. If a buyer only asks for licorice extract, they have not asked enough. They need to define form, glycyrrhizin level, whether DGL is required, solubility, moisture, ash, microbiology, contaminants, packaging, shelf life, and intended use. The second difficulty is supply geography. Raw material origin is concentrated in specific regions, including Central Asia, parts of the Middle East, and China. Wild harvesting can be affected by climate, access to land, overharvesting, labor availability, and government controls. Cultivation can improve consistency, but it takes years for roots to mature and requires investment. The third difficulty is processing capability. A supplier with root access may not have advanced purification, spray drying, DGL production, or documentation systems. That creates a gap between raw material availability and buyer-ready product. The fourth difficulty is trade risk. The report discusses sanctions, routing complexity, and market opacity, especially around some producing regions. This can affect payment, logistics, insurance, documentation, and supplier verification. Importer-side risk is different. Importers must verify that the supplier can deliver the exact grade repeatedly. They must also check regulatory compliance in the destination market, especially for food, supplement, pharmaceutical, cosmetic, or tobacco-related use. PPU can help identify suspiciously low or high values, but it cannot replace due diligence. In short, the product is tradable, but it is not casual. The buyer must treat it as a specification-driven ingredient, not just a commodity line item. Buyer and exporter scenario. Imagine a European ingredient buyer looking for licorice powder for confectionery and herbal products. The buyer sees that Uzbekistan, Iran, Turkmenistan, France, and China appear among the recent leading exporters by quantity. At first, the lowest-cost bulk supplier looks attractive. But then the buyer's quality team asks for microbiology results, heavy metal testing, glycyrrhizin range, pesticide status, solubility data, and food-grade certification. Now the decision changes. A bulk supplier may still be useful, but only if it can meet the specification and documentation standard. If not, the buyer may prefer a processor in France, Germany, or China that can supply a more consistent ingredient, even at a higher unit value. The price is not just buying the extract. It is buying reduced risk. Now look from the exporter side. A producer in Central Asia may have strong access to raw root and competitive extraction costs. That exporter can win in bulk industrial channels, especially where buyers are price-sensitive and require large volumes. But if the exporter wants to enter Europe or high-value wellness applications, the strategy must change. The exporter needs testing, traceability, possibly sustainability documentation, stronger packaging, stable specifications, and a commercial story that explains why its product is reliable. This scenario is the core of the market. The same product can be a bulk industrial input, a certified food ingredient, or a high-value extract. The winner is not always the country with the largest volume. The winner is the supplier whose grade, documentation, and route match the buyer's real use case. Final takeaway. The final takeaway is that licorice extract is not a simple hidden product story. It is a mature, specialized ingredient market with real trade volume, real industrial demand, and real complexity. The report shows that global exports reached approximately 52,000 tons in 2023, with export value around $450 million. It also shows a recent exporter structure led by Uzbekistan, Iran, Turkmenistan, France, and China by displayed 5-year quantity, and a recent importer structure led by Germany, China, France, the United States, and the United Arab Emirates by displayed 5-year quantity. But the real insight is not just the country list. It is the split between volume and value. Bulk suppliers win when they can provide scale, availability,